You need to listen to me at your own risk. I'm not a financial advisor. I'm simply a dude on the internet. So listen to me at your own risk. This is the Bitcoin on the Ichimoku, and we are going to be covering some macro analysis as well. Firstly, the dollar incredibly strong. This is the weekly chart. We're still rallying off a nice V bottom over here. The indicators, there are really no divergences on the weekly to speak of, nothing strong enough to reverse us at this time. If we look at the indicators, the Willy and the RSI not really oversold just yet, not really printing any bearish divergences. The dollar looks incredibly strong on the weekly. This is putting pressure on the stock market, yet we see Bitcoin still doing pretty well. Dare we say decorrelated from the rest of the market. This is the dollar on the daily. The previous candle, which was Friday, was a very bullish dragonfly doji, which is a continuation in this case. Although we're starting to print some bearish indications on the Willy, which is just a faster version of the RSI, but this can continue for quite a while. The RSI printed some bearish divergences down here, so maybe the pullback has already happened. We need to see this pullback for the stock market to get a bit of a relief, although it doesn't seem like Bitcoin is caring at all. Another one putting some pressure on the traditional market is oil. Now, oil, everybody, every transport company, every product that needs to create it needs to be transported to a certain location, and for that, oil is needed. Oil, very strong, putting pressure on the stock market. Nothing really bearish to see just yet. We're coming into some resistance levels, getting some rejections, maybe a cool down before heading higher. And generally, we want the stock market to go up for Bitcoin to catch a bit, but the opposite is happening. While the stock market is having a slight pullback and consolidating, Bitcoin continues to do really, really well. So, oil still nothing bearish just yet here. We'll see it the next few days what happens. There is some bearish divergences on the RSI. The Willy is starting to show some bearish signals. We want this to pull back for the stock market to continue higher and to get some tailwinds for Bitcoin as well. So let's get into the S&P quickly. The S&P, let's start with the weekly. Had lots of topping signals. This is a double top, or generally referred to as an M, as the second high is lower than the first high, and it's now broken below, making a new lower low. So this is technically a downtrend. Any retests of this line can be sold as a short. The RSI and the Willy both are cooling down nicely. Let's see if there were any divergences that form at the top there. So one MACD to the divergence there, breaking down. We really want to get above this line to nullify this move. There are some resistance or support levels at these levels down here, and also good support levels down there. It would be healthy for the stock market to at least pull back here. It's been a magnificent run from the lows. We can just measure how high we have moved in this time when everybody was calling for a recession. The stock market is up 31%, almost 32%, and currently sitting at 23% up. Let's see what the pullback is currently looking like. That is an 8%. Generally in bull markets, you don't see double-digit pullbacks. Let's see if we can maybe get to 9% and just above 10%. That would still be very healthy. If we look at these previous pullbacks, been 9%. This one over here was 8%. Generally, you don't get double-figure pullbacks, so maybe we find support at the 4176 level. That would be pretty bullish for the rest of crypto as well. if we go to crypto and we cover some of the Ichimoku cloud, I'm not going to go into the technicals of what the Ichimoku is, but I use the crypto Ichimoku. These have slower periods or longer periods, as crypto moves a lot quicker than the conventional market and forex as well. But if we go to the weekly, we can now see that we've actually closed the candle inside of the Ichimoku cloud. Generally, when you close inside of the cloud, and this is the weekly, so it's a large time frame, you can expect a move to the top of the cloud. Doesn't have to move in a straight line, it can zigzag all the way up here, but this is very good. We also have a cross of the two spans. That is a signal. Some people will take a long over here, and that has crossed. That is bullish. The lagging span, which is the line that lags behind of the price action, is above the price, so that is another bullish sign. The generally traders will only take a long when the price is above the cloud and you also get a bullish cross. Now that's pretty early still, but this is a large time frame. This is the weekly. But we are starting to see some bullish signs, including the lagging span above the price, the Kenjin cross over here, and we've closed inside of the candle. And this is going to be resistance, the red cloud, but generally you'll see a move to the top of the cloud. The top of the cloud currently sits at 42,300, and there, if we get a retest and a rejection down there, we can expect it to move lower. But the Ichimoku cloud will start to close, and we can already see it starting to get a little bit thinner as we're moving into this price. Now, this is very good signs for Bitcoin on the weekly sign. On the daily, this is also very good. We haven't crossed bullish just yet, but we have launched through the Ichimoku cloud here. We currently then have support at 28,291. The top of the cloud will act as support. Hopefully we can see a nice continuation throughout this level and a retest on the daily for a move to the upside. If we go to the total market cap and do an analysis on this, this is the total market cap. Still lagging a little bit behind, but these are still higher lows. If we can just plot the, yeah, still higher lows and higher highs. This is technically still an uptrend. We recently got a cross a few weeks back. That's one bullish sign, and the lagging span is above the price. We can see that by the green dot, another good bullish sign. We still have the cloud above us, which would act as a lot of resistance. But for now, we've got our first cross since the bull market started all the way back here. This was our first cross over here, which was the end of the Ponzi scheme that failed in China. And since it crossed, it had a little bit of a fake out with a virus, but after it crossed again, it never looked back. So this is the total market cap, including your stable coins and Bitcoin. This is the total to market cap. This is excluding Bitcoin and the stable coins. We have a cross, right? We are still below the cloud. The lagging span is red, which means it's below the price. So starting to form some bullish action here. We still have higher lows, and unless these higher lows get defeated, there's really nothing else to go on. These are still higher lows, which are bullish. Although we lost the higher low back in June, we're still well above the initial higher lows that we created when we bottomed. This is a much stronger chart than even Bitcoin, because Bitcoin made a new lower low after the FTX pump where the altcoins really didn't, and they're still moving sideways. This is still very healthy. The longer we can move sideways here, and the better the base we can build and the better market structure we can build, the higher the move to the upside will eventually be. If we look at total market cap 3, excluding ETH as well, Still, it looks very much the same. Still moving sideways. Still have our higher lows over here. And we've got 3 higher lows now. The Ichimoku cloud has not crossed yet, so the smaller cap coins, altcoins still consolidating, still moving sideways, which is pretty fine. The longer we create this sideways action, the more explosive the move to the upside will eventually be. So let them consolidate. Although it's not the alt season just yet, many of the altcoins will be pulled up in their USD value with Bitcoin, but they'll have their day when they're outperforming Bitcoin, when Bitcoin finds its top or starts moving sideways above its 200 moving average. That is the total market cap. And if we can quickly take a look at the CME gap or the CME futures, we can see also it is trading inside of the cloud now. This is the CME futures, which trades only during the week. So you will see some gaps form on these, but still very healthy, higher lows, very much the same as the BTC chart, and this still looks incredibly strong. If we look at some inflation indicators, this is the copper. Now, copper is needed for pretty much everything, especially for houses being built, and this is a good proxy to see if inflation is still increasing. Earlier in the year, the inflation came down. In June, it kind of bottomed, created a little double bottom, and rallied off. And we also saw that inflation kind of became a little bit sticky, but slowly downtrending now. And if we put on some divergences to see if it's toppy, yeah, we can see some topping signals happening, but now a lot of divergences coming in. This could actually be another bottom forming here to see us go a little bit higher, which is unfortunately for the interest rates. We might just see them stay elevated for quite a long time. And in fact, you don't really want to see a pivot, because a pivot generally means that there's something broken and it generally causes a crash. So if we can just keep the interest rates at a certain level for an extended time, that would give us enough room to actually have a good bull market and come down slowly over time if it is needed. Then let's quickly look at the overnight lending from the Fed. This shows how much liquidity the Fed is leaving at banks overnight, allowing more speculation to happen. This coincides exactly with the bottom in BTC and the stock market. Since they've started leaving some liquidity in the market, lots of assets have been rallying, including Bitcoin and the S&P. We can actually overload the SPX just on this, and we can see that the bottom came in at the topping of this chart. If we then put up the Bitcoin chart, we can also see that the top or the bottom came in perfectly down here. This was our higher low when this made a higher high, and off we went. It was lagging a little bit here when the Fed actually started taking action, and it is a little bit lagging behind here, but we're now seeing a nice rally off these levels. A bit of a reversal here. Let's see if we can have another turn down here, and that would just be more headwinds for the risk assets to continue to rally. Bitcoin dominance, and the last chart we'll look at, the Bitcoin taking some more dominance here out of the market. Remember, when this rises, the altcoins tend to suffer a little bit, but their USD value will increase, but their BTC pairings will suffer a little bit. This continues to move to the upside, and let's see if there are any divergences, or let's look at what the indicators are looking like. It was a little bit toppy here, had a nice little pullback and a reload to go a little bit higher. It looks like BTC wants to continue outperforming the altcoins, and this doesn't mean all the altcoins will suffer under the pressure, but most of them will suffer against their Bitcoin pairing. When Bitcoin moves fast in either directions, expect the dominance to continue rising and Bitcoin increasing its dominance inside of the market. With that being said, this will be all for this video. Please click the like button, subscribe if you enjoy this kind of analysis, and I'll see you guys in the next video. Cheers for now, and bye-bye.